bit higher. We've got, if you want to follow along with what we're doing, make sure you go to dtitrader.com/telegram or dtitrader.com/YouTube to review some of these live presentations. So let's see, Jonathan, do you want me to take over the screen sharing?
I can move it along, Chuck. Just
Okay,
we're gonna be joined
gotcha,
by Tom here any moment. Any
gotcha.
moment. Let's see if we can
So
get Tom logged in.
while he's doing that, there is a very high degree of risk involved in trading. Now, you and you alone are responsible for the trading decisions that you make. So you get to keep all the winners. Unfortunately, that means you get to keep all the losers too. Though we hope that there are a lot more winners than losers. So past performance not necessarily indicative of future results. Make sure that when you're trading, you trade with risk capital, money that you can afford to lose. Makes the whole decision making process a little bit easier. And of course, as I said, there is risk involved with trading. Sometimes the smartest decision you can make is to sit back and watch. So, in my opinion, waiting for Tom to express his, but in mine, I think this market for the better part of this month has been pivoting around the open of the month at 68.5475. Obviously, we see a big sell off today, get down to 68.0475, 68.5475 being the open of the month. So we're about 50 points below the monthly open, but we're still above the high of the month, which was 68.02. This is a bit of a red flag, though. If I'm not mistaken, last week's low was 68.05. So the market came down and tapped that. And I just want to look. Yeah, that was on Friday. We made it down to 68.05. But we're bouncing back up. We're back above yesterday's low, which was 68.1750. And, I'm trying to decide, Tom, is this market just trying to give enough ground to make a big run, or is this an actual turn? I I can't get behind the turn quite yet.
Well, I'll tell you one thing, Chuck. I'm gonna unplug this. I might have to come plug it back in. It's hard to stand up to broadcast. Uh, I'll sit right here, but somehow I didn't. This old stable, when I forgot to turn it off correctly, the battery was dead when I went to open it up. But you had to overcome. All right, let me just ask a few questions before we get going. I'm so excited, the people that listen, because I've been getting a lot of love letters from people about my silver. Did y'all notice last night in futures and in TNT? I said, "Hey, go for it." Pretty much was what I was telling everybody. Did y'all notice that last night? I mean, I even did a video basically saying, "Hey, pay attention. Folks, I watch this market. When it sets up and odds get in my favor, this old boy's going to take it." And I think that, it's very rare. I hardly ever do that, but when it happens, I will do it. Okay. And look, yeah, this is why I do it. Peg writes, "I would like to thank Tom and team for the guidance on silver. It helped me get out of the hole in one account. I also listened, took profits. This has been my biggest struggle. Thanks." Yeah, all points, great advice. But if you stay with me, and I'm with Roger here, Roger said, the hardest part for people to figure out, I live and breathe this. I'm a trader. And once they figure that out, stuff I'm telling you came from the school of hard knocks because I have lost a lot of money trying to master this game, as all of us have, right? And we got a team around me with Chuck and Jonathan, and it takes a very few words to get things done, but generally speaking, we got some pretty good stuff going on, and I think that sooner or later people figure that out, right? Okay, and that's my opinion. Send me a love letter, Reckitt. He just said I'm up 35% on that silver thing. It's good. Before we get into currencies, I want to tell people about a little something, Jonathan, and I told you about it this morning. I decided starting tonight and where this market is and where we are in December, I said I'm going to pick 4, maybe 5 products and go to Black Friday pricing. I got to get with Adam today. I can tell you live trading is a big success. It'll be one. Of course, TNT will be one. Roadmap, I've got some things happening there too. I've got to pick another couple, but only 5. And I'm going to do a marathon tomorrow. And this is where you got to clear your schedule for. At 10:30 tomorrow, I'm going to get started. And about every 30 to 45 minutes, I'm going to find us a trade. We'll have a minimum of 4 trades for everybody that attends. I'm suspending everything that was scheduled for tomorrow to do this. Anybody excited about me doing this? I'm excited about doing it. Are y'all excited about me taking tomorrow and showing you how to make money before Christmas? And I want to be in front of the computer. You know, I'm doing a one-on-one with Roger. We had a great time. He's learned right now 8 trades and 8 trades setups that work between 1:30 in the evening or in the afternoon and opening price the next morning because he works all day, right? And he does that. And, you know, his goal coming on this one-on-one was get those 10 trades to fit his time frame. We got 8. And I think it's pretty exciting anyway. Don says, how could you not be excited? Well, Don, I don't want people to take it for granted. It's hard work. And I've been telling people for about a month and a half, silver was the hottest ticket on the planet. Now, if you go look at year to date, Chuck, go check, or Jonathan, tell me what silver's up year to date, from year to date. You know, I've always been good on gold, but silver's always been my love.
Hey, Tom, MTI tells me 125%.
Yeah. Don't y'all want to listen to somebody can get you into something that is like that? This is not a one-off. I do this usually every year. I'll have one market that if you focus on that one market, everything else doesn't matter. 125%. It's even more than that. It's like one of our astute students pointed out, Tom, you're annualizing that when it really turns out it's a lot more than that. And I said, you're right. So today's topic and by the way, it's coming along. I got to tell you, we're working every day on our interactive home study course. And I got to tell you, it's we put the final pieces to week number 1 today together, and we're starting on week number 2. It really is fun to do. You know, I've got stuff that I used 10, 15 years ago, you don't know about, and I'm including that inside the interactive study. But anyway, clear your schedule for tomorrow. My promise is I'm going to find us 4, maybe 5 trades from 10:30 to 2 or 3 tomorrow. It's a marathon day. That's what we're going to do on Thursday. And I think you're going to find it very, very important for you to get the education. And if you like to trade, you'll get some trades. So today's topic is currencies. I think it's important for every student to understand currencies. You don't have to trade currencies, but you got to know reactions. If the dollar goes up, dollar goes down, and what the basket of currencies that make up the dollar. Okay? All this can be taught and fill out. By the way, let me tell everybody that signed up, okay? Everybody that signed up for the home study, Adam will have out an initial questionnaire. It's not hard. It's some basic questions you got to be thinking about today, okay? It's basic questions. So check your inbox. Adam, do you know when you're going to send that out?
I already sent it via Telegram. I'll send a email. I can go ahead and send it now.
Yeah, why don't you go on and send it? Adam, let me know based on the number of people signed up, because I want to discuss that at our next meeting. So schedule wise, Black Friday on Thursday, starting tonight, early bird look, and then tomorrow, and we're going to do some trade. Absolutely, Dave. You got it. I'll do it for you because you're my silver man. All right, take it away, Jonathan. I'll sit and listen in the background. You got it.
All
Okay.
right. Well, I'm
Go
not
for
sure
it,
which
Chuck.
one of us is going. All right. So, when we're talking about currencies, one of the markets that we always look at is the dollar index. Now, the dollar index is a benchmark index that measures the dollar's value against a basket of major foreign currencies. So, first of all, I guess we're going to have to get into what that means. So, this basket, we're essentially taking currencies from several different places and kind of combining them and getting a picture here. So the euro accounts for over 50%. Now, one of the main reasons for that is up until about 20, 25 years ago, we were looking at Swiss francs. Well, Swiss franc, we're still looking at it, but we were looking at the German Deutschmark, French currencies, Spanish currencies. So currencies across Europe all came in to be part of the dollar index. When those currencies kind of went away and we get the euro, now the euro is perhaps overrepresented, accounting for 50% of the basket, but it still makes sense in terms of the balance. We also look at the Japanese yen, the British pound, which at one part was part of the euro, but uh, gained its independence, I guess, kind of went in and out of that area. The Canadian dollar, Swedish krona, and the Swiss franc. So it's a little bit interesting when people talk about the euro, but it's also a little bit confusing. So we're going to stick with just there's the euro and there's these other currencies that are not part of the euro but are in the basket for the dollar index. Japanese yen is obviously that's clear, but the other ones are all, except for the Canadian dollar, all in that euro zone, if you will. So weights of ICE futures US dollar index. So this kind of breaks it down. What exactly are the percentages? Keep in mind, these do adjust slightly as you go throughout the year. So you want to kind of be up to date, but as a general rule, 57.6 in the euro, 13.6 in the yen, 11.9 in the British pound, 9.1% for the Canadian dollar, the Swedish krona at 4.2%, and the Swiss franc at 3.6. So if you have to remember just the top ones here, the euro, the yen, the pound, and the loonie, the Canadian dollar. The others make up a smaller percentage, but we want to see how the dollar performs along with, a lot of times people say against, but it's really more along with these other currencies. So that's the weighting. And let's go ahead to the next slide here and we'll look at this. So the dollar index, which is often denoted as DX, and then you're going to have for the futures, the month and year code after that. You can track that on Roadmap if you're using $ NYICDX, or an ETF to follow would be UUP. Symbols are going to be different across the board. You just need to recognize that. Now, when I'm looking at figuring out how the dollar is doing, a lot of times I will focus on the euro currency. Again, that is the largest percentage in the dollar index slash 6E for futures. You can track that on Roadmap slash 6EH26. So the 6E, which is the euro, currently on the March 2026 contract. Or for those of you who kind of steer away from futures, you want to stick to an ETF, FXE. So Fire X-ray What is E? Missing my phonetic alphabet here.
Echo.
Echo, there you go. I was thinking elementary, which would also make sense, but yeah, fire, X-ray, echo. All right. So dollar index mostly watched and euro traded. Um, but a lot of times you can kind of flip it around and move things a little bit differently. Foxtrot for F. Yeah, I shows you I was not in the military. Not like Tom. Tom served. I just watched from afar. Dollar index tracking. The Japanese yen is /6J for futures. There's an ETF, um, FXY would be the ETF for the yen. The Canadian dollar, the loonie /6C, and FXC is their ETF. You can kind of get a theme here. FX for foreign currency, Y for the yen, C for the Canadian dollar. When we go to the Swiss franc, that's going to be FXF or /6S. So they kind of mix things up a little bit there, but it works. The British pound /6B, the ETF FXB, and the Swedish krona FXS is your ETF. We don't have the futures sign for the Swedish krona. That's okay. You probably aren't going to be trading the Swedish krona unless you live in Sweden, in which case you know better than I do what that future symbol is. All right, so let's move over to our next one here. Insights. With the euro making up over 50% of the dollar index, the two are often compared side by side and typically move inversely. So as the euro rises, the dollar index falls. As the euro falls, the dollar index rises. Essentially, what you're looking at here in terms of this, these are diametrically opposed forces. So the dollar on one side, the euro on another. If the dollar gains, the euro drops. That's going to be the typical arrangement. It's very rare that you would see both of them going up together. In that case, something's really strange. So we always look for these to be somewhat inverse. All right, what's our next insight here? Historically, a stable to weaker dollar is better for investing in stocks and other risk assets. So, general relationship DXY moving up is a headwind for stocks. That's essentially inflationary. It means that it costs more to get the dollar. DXY moving down, a tailwind for stocks. The dollar is actually gaining strength. The dollar holds its value. So 1.0 for a dollar is good. 1.1, you have a stronger dollar, which can have benefits economically, but it also has a downside. And 0.9, you're looking at tailwinds for the stocks. Now, those are just numbers to give you that idea of up and down. Historically, you'll have to look back at the way that things move through. Swedish krona is SEKH6. There you go. Good job. Yeah, you can find a lot of information over at the CME. Philip doing a little bit of the legwork here. Let me go ahead and post that in to everyone. There we go. Let's see. All right. So next slide here. A stronger rising dollar will generally put pressure on commodities like crude and also metals. So anything valued in dollars, the crude market is valued in US dollars. Most of the metals that we look at least as far as we trade them here in the US, are valued in US dollars. There's a lot of information we look at that is valued in US dollars. So as the dollar is rising and gaining strength and it becomes more expensive to have a dollar, it's a stronger dollar. It goes further, it can push the prices down of certain commodities. As the dollar doesn't go quite as far, it has the opposite effect, obviously. So I'm probably jumping in front of the slides here. Let's look at insight number 4. Actually, no. Okay. So I wasn't jumping in front of the slides. I thought there was going to be one there for if the dollar weakens. That makes those commodities more expensive. It takes more dollars to make up the cost of the item. But we're going to go in and look at a daily chart of the dollar index. So this is this is today, right? I'm looking at the chart here, trying to figure out the date relatively recently. So the
That's
hot
that's a monthly chart. Excuse me. That's not a daily chart. It's a monthly chart.
monthly chart or a
Yep.
weekly chart, actually. It's long. Well, no, it's a monthly chart. Okay, so you switch it to a month.
Yep.
All right, great. So the high of the year, 110.18, midpoint 103.2. The year low, 96.22. So we've pushed that dollar index to the strong point. We haven't quite seen it as weak as many of you might like, because again, a weak dollar that there's some economic offset to that. Year low 96.22. So been hanging around the 103 area, but as you can see, for the past few months, we've been right along that par level, which would be 100.00, sitting a little bit below it here in December at 98.28. But you're really looking for, to make the least waves possible, the dollar index at par, which would be 100. Now, anytime you're dealing with an index or a market that has that sort of middle line, and it's about how far above, how far below you are, that middle line is what we often refer to as par. You just heard me say it. You'll likely hear Tom's use that phrase. So par is at the middle. That's where it's balanced at 100. Anything above 100, unbalanced to the top side. Anything below 100, unbalanced to the low side. So while the midpoint may be at 103.2 and we're a little bit below that, we're also a little bit below par, but that par level 100, and you can see that's where essentially the buy zone is at 100.04. So if you can see where that buy zone is on this chart, that would be the par level. We're obviously below it, and we'll see how far along that goes. But you can see how strong that index had gotten before, right? That top line there, that 110. That's kind of scary. We always like par. All right, so if you want to learn about this and several other topics that we cover with the Interactive Home Study course, that program launches January 1st. Sign up now, $9.99, 1 year early access plan. And for everyone joining us today, we're slashing the price down to a fraction of the cost, offering early access for just $9.99. Now, you got the link there. I'm sure that Jonathan or Adam is going to post it into the room. So we'll get that link posted. Let's talk about some of the big benefits of signing up early. Number one, as you guys know from last week, those of you who signed up early and were there last week, we have our interactive course or not necessarily course, but interactive meeting where you get to talk about what you want to see in this course, and we get to tell you what we've got coming down the pipeline. That's been going on. We had one of those last Friday. I think we're planning another one this Friday, if I'm not mistaken. Uh, Tom or Jonathan, feel free to chime in on that one. But, the idea was to get out in front of the people who signed up and let you have a voice in how this course develops. Obviously, there are a lot of topics that we want to cover, and we're going to make sure that we cover them well. But if there are things that you want to know about, we want to make sure that we get that taken care of as well. So you can sign up dtitrader.com/home or call 904-706-3532. And for those of you that have not signed up yet, remember, if you want to be a part in shaping the way this course turns out, the material that will be in it, make sure you join early. If you join late, you get all the benefits of the course, which is incredible, but you also are going to be at the mercy of what we decided was going to be in there, which, trust me, will be worth it. But if you get to have your 2 cents, sign up early. Have your 2 cents. Join us on Friday and let us know what you want to see in that course. Again, to do that, you have to be a part of the program. Interactive Home Study Course, $9.99, 1 year early access. Jonathan, have I just about covered everything?
Yeah, you did, and we are planning, or at least the original schedule planned for Friday at 12:30, unless Tom does another marathon on Friday. Just a reminder, he's doing a marathon starting tonight into tomorrow, all day tomorrow. So some of the other scheduled events will just, melt into the marathon tomorrow. We do have, Chuck, we got some CPI in the morning, don't we?
We do, and we have expiration early Friday morning. So we've got a busy 48 hours or so, 48 hours. And how many more until the market closes? So about 50, 53, 52 hours. It's going to be busy. I think it's
Yeah,
almost 52, which is actually fitting because we're talking about the interactive home study course, which is going to be 52 sessions, one each week.
yeah, that's why there's going to be plenty of time to cover everything we want to cover, but also answer topics that you all find interesting to you and kind of fill the gaps in your knowledge and education and trading the markets. So we look forward to doing that next year. But we're planning to have a session Friday on, at least that's on the schedule, Friday at 12:30. I'm going to play a video, Chuck, of the interactive home study course, Tom talking about it. It'll take about 20 minutes or so, I think, and then we'll close the room down.
Great. And if you haven't decided to come in yet, just listen to this. It'll probably make your mind up for you.
Let's talk about how we're going to make 2026 your best year ever. When I'm thinking about the market, and I want you to think about this year, 2025, it seemed like every week there were curveballs being thrown at you, and some of them were